Hello everyone and welcome to a new ATFX video. My name is Gonzalo Cañete and in this occasion I'm here to give you a quick and fresh update about Tesla. The performance of this stock, of this company, has been amazing during the last months of December 2025, regardless missing certain targets on 2025 that we're going to analyze in a moment. From a technical analysis perspective, the stock is doing really well. We got certain targets on our charts. I will share you in a minute with all details these charts. Remember, this is not advice of any kind. It's just my simple personal view on this asset. But before we go into details, let me remind you, if you're not subscribed to this channel, you should, because that's going to keep you updated about many different market events and topics. And click on the bell if you want to receive notification anytime we update new topics. Now, let's go to the report. And remember, give me a thumb up if you like the content or you have seen our last ones done. Now, as usual, I have done a presentation to follow all details and don't forget any aspects that I want to share with you. This is about Tesla Q4 2025, just before the expectations, before the results to be presented on 28th of January 2026. Now, the main problem during the 2025, something that it was causing certain concerns, especially on those investors who hold Tesla's own portfolio, was the missing target of 423,000 cars on production. It was Tesla delivered 418,000 vehicles in Q4, 4,600 it was the Model 3Y, and 11,600 it was the Cybertruck and others. And therefore, missing that target, which is bringing like 9% down of the annual targets, annual goals, 9% decline on the annual goals, it was one of the main concerns of the company. We saw certain drops during 2025 on the stock, and still the results, especially by December, was amazing. Now, three possible reasons that it was also pulling down the results of the company in terms of production and delivery. One of them was the expiration of U.S. electrical vehicles tax credits. As you know, Donald Trump was also announced that it was about to reduce in terms of those cost reduction or cost cut from the U.S. administration, was also the tax credit on electrical vehicles starting from 30 of September. Intensifying also the competition with China. BYD as a company is a monster, is meeting all the expectations and new records on sales, and it's affecting obviously Tesla company. But it's something Elon Musk knew in advance, and he has been warning about this for the last 2-3 years. So it was also expecting in the strategy of the company. And persistently high interest rates. Yes, since 2023 we have seen increase in interest rates, and obviously it was causing an increase on the price, especially for those ones who buy these cars using loans or credit, right? So that was the negative aspect. Now, there were certain positive things that changed completely, radically, the performance of the stock. Record energy store development provide critical offset, and we have seen how they generate 14.2 gigabytes in Q4, beat consensus expectation of 6%, followed by enterprise demand. 46.7 gigabytes full year, up to 49% year over year, nearly double prior year developments. In previous Tesla reports, we mentioned in this channel that the company, it was not only based on the sales of electrical vehicles, and therefore we should not concern about these results in terms of decline on the sales of the company. I mentioned this many times. I mentioned in past reports about Tesla in this channel also, there was 4 different business channels, 4 different sources of income for Tesla, and this is one of them, the stores of energy, production and stores of energy. And we have seen that it was one of the key factors for 2025 for turn completely the evolution of the price in the market. Extraordinary compensation packets. Shareholders approve $1 trillion of compensation packet for the administration, the CEO of this company, has a bonus if they achieve super ambitious targets. 1.5 trillion market capitalization, that's the first one. 12 million annual production of vehicles, that's another crazy target they set up for them, for the administration of the company. And also deployment of 1 million robo-taxis by 2035. That's the goals, that's the targets. And if Elon Musk achieve to these targets, obviously the result's going to be 1 trillion of potential compensation package if the company reached those levels, which is amazing and super ambitious. Again, now, bullish case and bearish case. We have done the positive aspects and the negative aspects and the main challenge of the company. Clear and crystalline just for those ones who want to get a quick view of what could be the top and the worst of the company. Energy store providing genuine diversification with structural demand for AI infrastructures. United States is getting crazy about artificial intelligence and data centers production, and one of the main issues, or the main challenge of the US economy is achieve good energy production to feed these data centers. Obviously, Tesla could be part of that development, that project, and therefore could make business in these demands and these needs for US economy. Autonomy from FSD monetization, which is the self-driving systems function, and therefore it's another source of income for the company, not only by using in applications like robotaxi as a new core business, but also renting that system, the FSD of drive system, to other competitors or other companies, as we mentioned in the past in other previous reports of Tesla. For the last 2 years, we have mentioned that competitors probably at some point will be more profitable for them rent the driving system from Tesla, which is more advanced than others because it has been developed for many years, that produce their home drive systems, self-driving systems, right? What else? Very case, we have seen a US vehicles preference share declining to 29 from 38%. That's the negative aspects. The decline on sales, but as we mentioned before, is not a big issue, a big problem. And obviously, China competition intensifying. Regulatory credit revenue declining for 0.4 to 1.45 billions. So anyways, that's the main problem. A massive beast like BYD selling self-driving systems also in vehicles for since $10,000 per vehicle, when Tesla was doing the same thing for $30,000. Obviously, it was a massive risk for the company in terms of sales. It's hitting the sales, yes, but Tesla is doing well in other aspects, and therefore we can summarize all with this, guys. We can summarize all with the charts. As you can see, the price was declining in 2025. The concerns, the battle between Donald Trump and Elon Musk was causing this massive drop on the price because everyone was concerned about if the company it was reaching the end by this internal political fight between Donald Trump and Elon Musk. From that, the company has been doing really well, rising and rising and rising, and therefore that's why we believe in short term we got targets around $525. $525 per share could be the next target on the company, and in case that the results on 28th of January are coming in the wrong way, I believe we can always trust in a $420 as a base or support for new entries, and therefore for hold the prices and push it up to a new top levels. So therefore, positive, optimistic view on this stock, and good expectations for the medium term. Middle term. So let's see how it's doing, how the stock is developing for the coming days as after the earning results. But I believe this is one of the good ones that we can hold. I hope you enjoyed this video. If you like it, give me a thumb up. Leave your comments if you want to add something else, and see you in the coming videos. Bye bye.